Gold increasingly in the future will be at once a medium of exchange and a store of value, which is another reason why I think you have to own gold. On the one hand, to defend yourself, and on the other hand, as a recognition of the fact that gold will once again fulfill a role in society that it hasn't fulfilled since the 1800s, which is to say, simultaneously a medium of exchange and a store of value. It's very difficult for me to understand why a rational human being wouldn't have a substantial gold portfolio.
My target on them was 5,000 gold and $100 silver. But I will tell you this much, what I do know. If you told me a year from now gold was 10,000 or even 2 years from now, I will tell you that whatever problems I foresaw was going to happen, not only did they happen, but things got even worse. In fact, the irony of this, which isn't spoken about again in the so-called mainstream financial media, is that bonds actually lost money over the last 4 years.
Forget the slow gains of the past. Precious metals have just shattered history. As of late December of 2025, gold has surged past a monumental $4,400 per ounce, while silver is electrifying investors by outperforming the yellow metal with a staggering 140% year-to-date gain, nearing the psychological $70 barrier. In this exclusive breakdown, Wall Street Whiz Kid, PeterGrandich, reveals why he moved his clients out of stocks and bonds years ago to prepare for this exact moment. He discusses his bold targets of $5,000 gold and $100 silver, but warns that if we hit those numbers too quickly, the world might be facing a crisis far worse than a simple market dip. Grandich explains why mining producers are the ultimate free cash flow play right now and identifies the one hidden risk that could turn even the best mining stocks into general equities during a meltdown. Are you holding a safe haven, or are you caught on the wrong side of the short squeeze? Let's watch clips from PeterGrandich's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
5 years ago, I made a decision I don't think 1/10 of 1% of financial advisors and investors did. And I felt at that point in time, because of something that was happening in the world known as BRICS and all, and how gold was going to go, that gold was going to outperform both stocks and bonds for capital gains. Not because it's going to get me a loaf of bread when everything comes apart, just for capital appreciation purposes. And so I advise myself, obviously, and clients to sell all their general equities and treasury bonds. And our entire clientele, which is in a couple of thousand, the total number that listened to me completely was one, and myself. Some did it a little bit less, but the majority didn't do it at all. And, you know, I can only give my views, and then it's their decision on what they want to do. Well, the bottom line was, and for that performance you talked about, gold and then the mining shares and uranium and all the other things we went in, they just greatly outperformed the stock market. And in fact, the irony of this, which isn't spoken about again in the so-called mainstream financial media, is that bonds actually lost money over the last 4 years. When I started as a stockbroker, I can remember all the sales managers kind of saying the same thing. You put your clients in stocks for capital appreciation, and you put your clients in bonds where you don't want them to lose money. Yet bonds lost money. But that's the reason that, you know, the market's done so well. But even with those gains, I don't feel there's going to be a repeat process like that. I still think that market can still do well, but not as well as it's done over the last 1 and 5 years. My target on them was 5,000 gold and $100 silver. Many times that's because it's round numbers and that's what people like to hear and all. But this is what I say to the people, and I have some good friends still in the business that are talking about much, much higher levels, 10,000, 20,000 on gold. And my comment to people is, I don't know if that's possible or not. I really don't. It can go either way. But I will tell you this much, what I do know. If you told me a year from now gold was 10,000 or even 2 years from now, I will tell you that whatever problems I foresaw was going to happen, not only did they happen, but things got even worse. That would be the driving force to make those metal prices go up that much. Silver's a little bit of a different story in that it's a more of a true supply-demand scenario in a market that has been suppressed for a long time. And much of the above ground supply is gone, and a lot of people had played the short side and now are caught on the wrong side. But there too, if it got much above 100, I would tell you that the world that we still have to live in might have gotten bad enough that even what you made extra because gold went wasn't really worth it, because how much tougher things may be. But I do think the winner within that is the companies that go look for and especially produce it. If you think about this now, you have a gold producer whose total in cost is 2,000 or less on average in most, especially here in North America. And now you, like you said, you had gold at 4,400. Well, in Canada, gold is 6,000 in their money. So, and that's where a lot of Canadian gold producers are. The amount of free cash flow that they're making is enormous. But even if gold doesn't go up, they're going to continue to make that because their two big fixed costs don't look like they're going higher. Energy costs, which has dropped a lot, and wages for, workers, which wage pressure is not, people can't pressure for higher wages in the environment that we're in here. So the companies that produce it will probably do better in percentage gains than the actual, what gold and silver may go up. There's always risk in that. And the one asterisk that you put with that is, if there is a crash, and I'm not in a camp of a crash, I don't envision one day down 25 or 50%, but you can never say it can't happen. But if we have a very big meltdown very quickly versus a rollover, mining stocks become general equities during that time. People will sell them because chances are they have issues in other investments that they have to meet margin calls or what have you. But other than that, you're going to see money managers looking through 2026 and looking at various sectors going, man, there's no growth. What's this gold thing? They keep going up. And we're seeing that now.
Financial veteran RickRule argues that gold is a must-own asset, not just for defense, but for its renewed role as a medium of exchange. He explores the future of gold-backed digital coins and emphasizes the absolute necessity of secure, third-party vaulting to avoid the storage scams of the past. For Rule, owning gold isn't just about safety, it's about returning to a rational form of money. Is your gold sitting idle, or are you ready to use it as the ultimate store of value? Now let's watch some clips from his interview.
I think gold is a must-own asset, and I wish I didn't have to say that. Gold has served its purpose for at least 1,000 years, but likely longer, as being both a medium of exchange and a store of value. Gold does well during periods of time when people are concerned about the maintenance of their purchasing power in fiat-denominated instruments. We've already talked about why people need to be concerned about that, because there's a guarantee that your purchasing power in fiat savings instruments deteriorates. With gold, at least you have a chance. And it has evidenced itself as a superior store of value for at least 1,000 years. Importantly, too, with the advent of technology, gold is becoming at once a store of value and a medium of exchange. And let me explain. When you, Daryl, go to buy physical gold at a dealer, whether or not it's in the state of Washington or not, you're probably paying a 3% premium on the buy side and a 3% premium on the sell side. In other words, your transaction cost is 6%. But increasingly, with the availability of digital coins representing gold deposit receipts at places like Tether and elsewhere, you will be able to do that same transactions for fractions of a percent, which means that you will again be able to use gold as money. You'll be able to go to Starbucks and buy a cup of coffee in gold. And Starbucks will be able to aggregate all of those fractional payments and, if they wish, surrender those coins for physical gold, which means that gold increasingly in the future will be at once a medium of exchange and a store of value, which is another reason why I think you have to own gold. On the one hand, to defend yourself, and on the other hand, as a recognition of the fact that gold will once again fulfill a role in society that it hasn't fulfilled since the 1800s, which is to say, simultaneously a medium of exchange and a store of value. It's very difficult for me to understand why a rational human being wouldn't have a substantial gold portfolio. One needs to familiarize yourself with the Tether product. My understanding is that the Tether product is not 100% backed by physical gold or silver, although I don't need to know that to be the case. I am, as I say, unfamiliar with all of the specifics around the Tether product. I am unsure as to whether the Tether stablecoin is 100% backed by physical gold or silver, and whether or not one can surrender the XAUT for physical gold or silver. If that feature isn't present, either Tether will add that feature or somebody else will create a coin that will allow you to do that. Mm-hmm. Probably the most secure form of storage would be in a vault that was owned by a publicly traded company, so that you could assure yourself that the balance sheet and the income statement of the vault owner precluded you from experiencing the risk of the vault owner stealing your gold or silver. At Battle Bank, my bank, we have insisted that our own gold and our customers' gold be stored at Brinks, precisely because we don't want them to store the gold at home, where they could experience personal security risks, but also because my memory of the 1970s was that a lot of people trusted their gold and silver to storage facilities that then either folded or stole the metal. And I don't want to experience that risk.
Ultimately, whether you are hedging against a cooked economy or capitalizing on a new monetary era, both analysts agree that holding real assets is no longer optional. While Grandich warns that a rapid surge to his $5,000 target could signal a world in deep distress, RickRule highlights that technology is finally making gold as spendable as cash. By moving away from deteriorating paper instruments and securing physical metal in reputable vaults, you aren't just speculating, you're reclaiming your financial sovereignty. Are you ready to exit the "don't worry, be happy" crowd and join the few prepared for the coming reset? Share your thoughts in the comments section below. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.